Hey everybody, good morning. Business owners, do you want to know the three tax deductions that will save your money? In this video, we're going to show you how to deduct your home, how to deduct your car, and your internet. How do I know this? My name is Albert Corey, and I've assisted over 140,000 tax owners, saving them over $60 million. So today's three topics is we're going to show you how to deduct your home. Your car is a big tax deduction. And guess what? You're an internet. These are the three simple topics we're going to talk about today. So the first one we're going to talk about is how to deduct your home. The three biggest things you can deduct when you can deduct your home is your electric, water, rent, part of your interest if you own a house, and your HOA fees if you own a house. So now let's go start talking about how you can deduct them. See, the IRS says that anything you do to move your business forward. So obviously, if you're a home-based business, that means if you get a 1099, if you work from home in a business, it now becomes a deduction. So what will happen is you can take a square footage of your house. I've been doing this for over 40 years, and I'm going to tell you that you could probably deduct between 15 and 20% of your house, because how it's done is you take the square foot of wherever you're looking for, which is what you would have to do is get a ruler and measure all four walls. That's the size of the room. And then you would divide it out amongst the square footage of your house or apartment. That's going to be your square footage. You get that percentage. The next thing you do is obviously you want to make sure you add up, how much you pay in electric, how much you pay in water, if you rent your apartment, what you pay in rent. So that's going to come out. Usually the average person is saving about $4,500 a year. I figured it out. It's coming out to $4,500. But here's another cool ninja trick that's coming out. So now I want you, if you own your house, guess what? Start deducting 15% of your taxes and insurance on your self-employed, on your business side. Because what's going to happen is you can't double dip. IRS won't let you double dip. But since most of our clients that I've came through, the standard deduction is so high. What does that mean? The government gives you, if you're single, $12,500. If you're head of household, which means you have a dependent, they're giving you $19,000. And if you're married and your husband and wife both sign the tax return, they're giving you $28,000. Now, I've done this, we already did, this is the 2023 tax season. After filing over about 1,600 tax returns, very few people went over the standard deduction, especially if you're married. So therefore, the government doesn't let you double dip. So now you can take that, and if you're a self-employed business, if you have a 1065 tax return, if you work from home, that could be if you're doing eBay, MLM business, realtors, anybody who gets paid 1099, anybody who's using Zelle and getting paid to do their business, they all can now start using this tax deductions. But guess what? Because once you start putting it on your tax return, you probably are going to save probably at least 10 or 15%. You always save at least 10 or 15%. What's also pretty cool is if you have a condo, association fees, guess what? That's one way to get it deducted because it's part of the rental expenses. Okay, that's all part of the rental expenses. So now all that can be deductible. So let the government start paying for this stuff. I'm not saying cheap. I'm saying this is a legal deduction that I've been helping my clients for almost 40 years. For almost 40 years, we've been helping our clients. And guess what? It's been working. So now here's something else, you can deduct. If you have repairs in your house, okay, it's the same thing. You could take off the business percentage. What I found out on the business percentage was, like I said, it's been about 15 to 20%. You want to be very conservative, say 15%. If you fixed hot water heaters in your house, electrical problems, all that. Because here's the logic behind it. Working out of your home is your office. So if you went out and rented an office, or like I do, I have an office in Hialeah, Florida, anything breaks in my office becomes a deduction. So if you're working out of your house, it's the same process. So let the government pay for it. But the trick is you have to have a business. You see, the biggest problem coming out COVID is that people think because so many people work at home that it's a deduction. No, it's not. You have to have a business. As long as you got a business, and IRS says is you got to be moving your business forward. So what does that mean? Well, even if you're a startup trying to sell on eBay, Amazon, Realtor, it really wouldn't matter. But what are you doing to move your business forward in your house? Maybe you're watching this YouTube. Maybe you're watching this YouTube video, watching this on Facebook. Okay, if you're watching this video, then now your house, now your house becomes a deduction because I'm giving you information to move your business forward. So that now it becomes a deduction. And it's legal. It's legal because I have a real office here in Hialeah, Florida. I pay tremendous rent. But so if you got an office and you're moving your business forward, maybe you're reading your audiobook in your room. So watch a YouTube video. That will make your business, just move anything forward. Write out your business plan. Okay, call your accountant. Do your business consulting. Anything that you can say, move your business forward, becomes a tax deduction. Another great tax deduction that you can start to write off is your internet and cable bill. That's right, internet and cable bill. Let's take each one individually. On your cable bill, on the cable bill, it becomes, by the way, if you hear music and sound, it's because I have a real office sitting here. So on your internet and cable, it's the same thing. What is the let's go out with your cable bill. Every day I'm watching Shark Tank and I'm using my internet, obviously, to watch the YouTube videos. Watching, a lot of times we watch from our cell phones, but we're in the house. So are you watching videos to move it forward? Did you take an online class to move you forward? Okay. If you have a business checking account, are you checking your business accounts? That's moving you forward. If you're doing stocks and using your phone or the internet in your house, on your laptop, all that becomes a tax deduction. You just figure out kind of what the percentages are. So right now on the internet, I'm saying most of my clients are pretty much using this at least 50% of the time. So all that becomes a deduction. The average internet bill coming into my office is usually about $90, $110. So guess what? That's $50 a month times 12. That's a $600 deduction. Cable is almost the same way. If you are watching CNBC, Fox Business News, that's all the deduction. If you are going on shows, I love going on the internet and or even on cable and watching, Shark Tank, any of these business reality shows, because as I'm watching these shows, I'm learning something. You'll be surprised if you paid attention to Shark Tank or any of these business reality shows. Any of these business, even cooking competitions. you'll be surprised how much how many things you can think of, and it's going to push your memory and push your business forward. Okay, so that's pretty much it for today. My name is Albert Corey. If you have any questions or comments, you can leave it below. We also have a free consultation. If you call 305, it's in the scroll below, 305-823-9228. You can call us free consultation. Please leave some comments below if you have any things you want us to talk about in our next show. And always, if you're watching this on YouTube or Facebook, please watch our next video for more tax tips. Thank you and have a great day. Bye-bye.